Credit is extremely important in the mortgage world, especially now coming off of COVID-19. The pandemic is pretty much over. America's reopening. So you got to make sure your credit is tight. Student loans. Everybody's talking about student loans, they're in forbearance. Unfortunately, if your student loans are in forbearance or deferred and you're going with FHA, then the lender is going to use 1% of your balance to include into your debt to income ratio. So remember this, guys, if you got, let's just do easy numbers, 100K in student loan balances, 1% of that is $1,000. And that's what the lender is going to use. Now, what people don't realize is conventional loans do not have the same guidelines. Conventional loans will accept your payment if you're in an income-based repayment plan, and that payment, you get a letter from your student loan company showing that your payment is $5, $10, $50, whatever it is. On a conventional mortgage, we will use that payment. So a lot of people always say student loans are hindering them from buying real estate. And it's not, it does. I'm not going to try to make light of it. It does if you're going FHA. But the flip side of that is you have to go conventional if you can qualify for a conventional loan. So I want everybody and all the earners, all the YouTubers right now to really understand, if you have student loans, ask your lender if you can get approved for a conventional mortgage versus a FHA mortgage, right? That's number one. Number two, if you guys are participating in any sort of credit repair, make sure that your credit repair is completed before you apply for a loan. Reason being, most credit repair companies are disputing these liabilities on your credit report. So when a lender pulls your credit report, it's going to show, your American Express is currently in dispute. That's going to be the language that's on your credit report. Lenders, per the guidelines, Fannie Mae, Freddie Mac, FHA, VA, they cannot lend to someone who's actively disputing their trade lines. So what you have to do is resolve those disputes, and then the lender has to re-pull your credit again, which will result in a second hard pull, which can ultimately lower your credit scores. So I see this a lot all the time. People be in the middle of doing their credit repair. They're in the beginning, the middle, and they're so eager because their scores might have jumped up 20, 30, 50 points, and they want to go execute. Great. But you have to finish out your credit repair. Either just tell your credit repair guy to end the disputes and resolve them, so then you can go ahead and run your credit. So people are making big mistakes by having double credit pulls, within a 30-day period of time, and then it drops their scores back down. I see this shit happen all the time, fellas, all the time. So please, with student loans, not student loans, with credit repair, just make sure your liabilities are done with the dispute, right? Now, but obviously with credit scores, 580 FHA, 620 with conventional, 580 with VA loans is the minimum credit scores nationwide, pretty much. Some lenders will have overlays on top of that. Overlay is basically when the lender will put their own guidelines on top of what the government guidelines are. All right. So if your lender is telling you that you need a higher credit score, then you must ask them automatically, what other overlays do you have with your lending programs? Because that lender might not be the lender for you, because they might be more restrictive. Me personally, I follow the guidelines, the agency guidelines to a T. We have no overlays. So whatever we can get an automated underwriting approval from desktop underwriting, AKA DU, we will lend. All right. But make sure you guys find that out. Now let's talk a little bit about loans. Since Kevin was talking about hard money, fixing, flipping, things of that nature, let's talk a little about rehab loans, right? We got the Homebuyers Blueprint Volume 2, which is the number one. The Homebuyers Blueprint series, first of all, is the number one freaking series of home buying in the world. Let me just tell y'all that. It is the absolute biggest, right? It's keeping up with the brand motto of the biggest, right? Everything we do over here is the biggest. And everybody who has the blueprint will attest to this. The information is almost free and priceless, right? But let's talk about ADUs, accessory dwelling units. A lot of us we always talk about multifamilies, right? We talk about house hacking all the time. But what people don't realize is that a lot of states are very ADU friendly. Places like California, for example, because there's housing shortage. There's not enough homes for the people that need them. So what ADU is basically, think about your garage. The California will allow you to turn your garage into an apartment, right? And so it's a legal single family with an accessory dwelling unit. Here in New York, fellas, we call those mother daughters, right? But everywhere else is more accessory dwelling units. You can use a Fannie Mae Homestyle loan to convert your garage, your basement, into this ADU unit, and now you can house hack legally. And Fannie Mae will allow you to use the rental income, the potential rental income from your ADU to help you qualify as well. People don't really understand the value in that because most markets don't have duplexes, don't have three families, don't have four families like they do here in the Northeast. So I want everyone who's listening to this to understand you can house hack with a single family also. Buying a single family is not the worst thing in the world. Unlike a lot of people like to talk about on social media, they say it's not an asset. But with a Fannie Mae Homestyle renovation loan, if you don't have those funds, you can use this product to house hack your single family if your state or county will allow you to legally um, convert your basement or your garage into an ADU. Hell, you don't even need a garage in some cases. They'll allow you to build a brand new structure also, and it'll be an ADU. And you can do that with a Fannie Mae Homestyle loan too. So I want everybody to really understand the value of these ADUs. They're becoming very popular all over the country. So folks, do your research, do your due diligence, as we always say. See if your town and your city will allow it. But rehab loans is where I want you guys to focus on.
That's an Instagram. That's gonna be an Instagram clip.
I was thinking that when you when I was saying it, I was like, I wonder if Shadi's writing down the timestamps.
I did. I wrote it down. 50 minutes into the conversation. That's an Instagram clip. Congratulations.
Shout out to the clips. Let's go viral. But yeah, ADUs is where it's at. Fannie Mae Homestyle Rehab Loans is a great product to use. You can use Homestyle renovation with single family properties. You can buy vacation homes and fix them up with Fannie Mae Homestyle. You can buy investment properties with Fannie Mae Homestyle renovation loan. Now, second homes are not multifamily, guys, because I know some of you are going to ask that. Well, can I buy the four family that's a second home? No, you cannot buy a multifamily and use it as a second home. You can buy one family. So when you think about second homes, think about my guys are in Miami right now. Think about buying a condo in Miami where you can go visit and have a good time and you can stay in your condo. But now when you go back to New York or wherever you're from, you can now Airbnb it. You can use this loan, put 10% down and get 100% of your rehab costs. You can buy a one family investment property using this Fannie Mae Homestyle renovation loan also. So if you want to go buy something in Cleveland, there's a lot of hard money lenders that won't even touch anything under 100K. Well, Fannie Mae technically doesn't have a minimum loan amount. Lenders now will cap you, but I've seen and I've done deals 50,000, 60,000, 70,000, 40,000 with using a Fannie Mae Homestyle renovation loan too. So for those of you folks who are trying to buy in these smaller markets, don't discount this product. Now, you can get 100% of rehab and there's no experience required, which is the beautiful thing about these loans. See, well, hard money loans, like Kevin was discussing earlier, you have to, if you want the higher financing, 10% down, 15% down, you have to have experience. If you don't have that experience, they're going to require 20, probably to 30% down, just depending on the deal and depending on you and your credit and everything like that. With these loans, you don't need any experience. You just need to be able to qualify from a debt to income ratio perspective. And then when you close and you finish your rehab, guess what? You got a deal under your belt. So now when you go to Kevin, you'll be able to say, hey, here's my settlement statement from my deal that I just rehabbed, and now it's my rental or it's my flip. Now you have a deal under your belt and you leverage your personal credit, your personal income, and you got yourself in the game. So now I want to say this, it's not going to be as quick as hard money. you got to have your ducks in a row, right? And that's what the Home Buyers Blueprint Volume 2 is going to teach you, how to get your ducks in a row, how to get these deals closed 30, 45 days. They can't take longer if you don't have your ducks in a row. But that was the whole purpose of Volume 2, was to teach you guys how to go out there in today's competitive sellers market where 70% of the people that I'm doing loans for are paying above asking, where I'm trying to flip your mindset to say, think like the investor. Understand the 70% rule that hard money lenders are going to use. You can compete with these investors because 90% of them, 95% of them are not going to go above 70% ARV. ARV is after renovated value, for those of you who don't know. Most of them are going to stay below that because they want to get financed. But you, as a home buyer that's going to live in the house or buy an Airbnb for vacation purposes, right? You can go to 80% ARV and outbid them every day and walk into your property with 20% equity if you know the game. So the Home Buyers Blueprint Volume 2 is what you guys need. You need it, and I'm telling you, it's going to save you a ton of money. I know I'll keep going on and on, but like, look, we here for a reason and purpose, baby. Yeah, I need to get with the program.
Real quick, the Fannie Mae, it can be used for 1 to 4 families, condos, and co-ops, correct?
So 1 to 4 family. See, Troy been taking it. So 1 to 4 families, condos, Fannie Mae approved co-ops. So now with condos and co-ops, you can't do any exterior renovations because you can't, right? You can only renovate what's in the interior of the property. But yeah, you can with multifamilies with that program, but again, it has to be your primary residence for multifamilies.
Nah, that's a vibe.
I only know because I went through the course, my brother.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.